Recording in progress.
What's up, everybody, and welcome to Profits at Noon. This is our final session of the week here on Thursday. We have opened up the room just to give everyone a chance to trickle in and find that great seat, get settled, get their popcorn ready. Welcome, Seth, Hal, my man, always great to see you. I hope you are well. We're going to get started in just a minute here, guys. As always, just giving our usual suspects a chance to trickle in and get settled. Quick shout out if you're joining on the simulcast over on YouTube. There is a link beneath the video within the description that'll get you inside these Zoom events with us in the VIP section. Awesome. David, Natine, Perry, welcome. I hope you are all well, having a great week. Looking forward to a nice weekend. I don't know about you guys. Come around this time, Thursday through the rest of the day, my head's already in the weekend. But we do have some more analysis to cover here today to close out the week. And we'll have some updates for you, of course, heading into our next session on Monday of next week where we will regroup. Awesome. So I know Thursday seems to be a busier day for a lot of our folks. So that's okay. If anybody's running late, we'll give them a chance to join us in just a minute here. For a reason, I see you're back with us on YouTube. Welcome back, sir. Sir or ma'am, I do apologize. It is great to have you. As always, feel free to fire away in the chat if you have any questions throughout today's session. Again, we do have a guest in the house. Those of you who have joined us this week, he'll be with us again today, and I'm going to get to that in just a second. But speaking of that guest, our good friend Tony Edwards of Trader Smarts, it looks like Perry has a quick note in the chat there. I'm not sure if you see that, Tony, but that is a testament to the magic you worked with us yesterday, sir.
Awesome stuff. Well done, Perry.
Nicely done.
Very cool. So for the group, yeah, if you're over on YouTube, Perry's just shot us a note, $560 on crude today. Use Tony's 128 tick from yesterday. Awesome. We love to hear it. That is great. Fantastic. Hal, day is going well so far. We still got plenty of day left, but I am fortunate my parents are in town this week, so I'm going to be able to go grab lunch with them, which is always nice. So looks like we're 2 minutes after the hour. So let me get things fired up here. We'll get the session going. The man, the myth, the legend, King Richard is back in the house with us here today. We will resume that analysis with updates from Monday's session. If you're new to the session, we are live 3 days a week, Mondays, Wednesdays, and Thursdays at noon Eastern time. We're going to show you the levels that we are stalking for potential entries. We like to call these our levels to lock. In addition to that, we'll do our best to steer you clear of any market traps, news bombs, surprises that could be waiting around the corner. So we're going to give you lots of great live analysis across our 6 favorite futures markets and ideally actionable levels that you can stalk along with us. And of course, join us in the follow-up sessions to see how this all plays out. So stick around for that. We're going to do that in just a second here with Richard. But quickly, I do want to make a note. Tony has been with us this week as a featured guest. And so he's going to round out the week with us here today. Tony has a couple things he's going to share with you. Today, we're going to take a look at some journaling tips with Tony, and this is very important stuff, so I do encourage you to stick around for that. And of course, he will have that special link available to you guys exclusively here in Profits at Noon. He's going to go a little more detail into it, but we'll put it this way. It is a no-holds-barred trial. It's a low-dollar opportunity to really get in and sandbox and try out everything Tony has to offer. In addition to that, we want to mention that Tony is firing up a new group mentoring session on Monday of next week. So we'll have some details on that. That is a more timely opportunity, so we'll definitely encourage you to take advantage of that. But more info coming your way on that as we get fired up. And then, yeah, let's just get this thing started. So what do you say, King Richard, sir, my liege?
Awesome stuff. Awesome stuff. Thanks, Nate.
Do us the honor, sir, and I will fade into the mist until we have some Q&A.
There we go. Can't wait for the dad joke afterwards.
Oh, I've got a 3-parter. I should have mentioned that on the front end. 3-part dad joke coming your way later today.
Great stuff. Right. Thanks for joining, everyone. Do apologize for yesterday. I had a bit of I won't say technical glitch, but completely out of my hands. Luckily, we had Tony around. From what I hear, he did a great job yesterday. So I do apologize for not being here yesterday. But I'm back again. Everything's been sorted out. And as always, we'll be going through the EST-NQ, the WAM Russell, gold, and crude oil. But as always, just a quick disclaimer. Please note that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options or Forex. All right, just going to disappear off screen for the analysis part, and then we'll jump straight into the ES. Finally, got a breakout out of this range that price has been stuck in, sort of from the beginning of this month. I think the probability is now pretty clear that this was the end of a fourth wave expanding triangle, or some might call it a megaphone pattern. Remember, we're in this same session around about that, when was it, beginning of May, we were looking at actually during a session price sort of making lows, and I was saying there's an invalidation level that will invalidate this pattern. Price stayed above that, had a very strong movement to the upside. And of course, we wanted to see a strong move to the upside, because typically when these patterns end, especially when they're expanding triangles, you quite often see a very strong bounce, which we did get. And then obviously we sat through this mess for quite a while. And then finally a break up to the upside. So I can probably say with almost certainty that this probably was an end of an expanding triangle. Price just has not yet taken out these highs or set at the end of April. So I do think that is still a possibility. Remember, we've been following the sequence to the upside, not really looking at the bigger picture too much, but more sort of focused on what's been happening here, so around the 13th of March this year, where I labeled this sort of messy move to the upside, very sort of overlapping price action, as a potential first wave of a leading diagonal, a second wave that failed to break. Start of this wave, we had a 3. I was and eyeing between placing a 3 here, there, wherever the case might be. But as things unfolded around about this time frame, like I mentioned, I was thinking we were dealing with an expanding triangle, and it does still look like that occurred. So what I'm saying now at the moment is, if this is a fifth wave going to the upside, I'm still thinking that when that wave terminates, wherever that might be, that we could potentially see a deeper correction at some stage. Alternatively, price could just still move much higher. If this was the end of a fourth wave, which I still think it was, then potentially this was a first wave higher, a second wave higher, and potentially this is building as a 3, 4, or 5 to complete that fifth wave, and then potentially see a decline. So that's still the sort of idea, the outlook that I've been working with for quite some while. So pretty still on track with that analysis and the forecast. Price has been trading above today's pivot point at 4,157. Just pipped R1 today at 4,192, and struggling to stay above it. So by way things look right now, potentially going to see a break of this, maybe today, maybe tomorrow, who knows. But yeah, it does look like that fourth wave potentially ended. Right, next up, NQ. Obviously way stronger from a price action perspective than the ES and the YM for that matter. You know, I've had this pitchfork on my chart since we started the analysis on NQ in March, when it was the beginning of March. And although price even left boundaries to the downside of this pitchfork, something I quite like to do is to draw a ray, whatever the case might be. You can use a trend line, draw it parallel to one of these. Oops, I should not have my magnet mode on. Just get rid of that quickly. A line parallel to one of these median lines, and even during this decline that went below the lower limit of this pitchfork, price continuously respected that angle, and as for a while already, well, when was this, already back here in sort of beginning of this month, already broke above that high where the ES hasn't. So obviously a different market, different index, but yeah, I've been very strong, sort of leading the pack in the indices. Price been again above today's pivot point at 13,594, broke R1, broke R2, and it's also now pipped above these, or not pipped, but moved above this angular, which I would have said potentially could act as resistance. There's a little bit of a, I'm going to say, confluence between today's projected range high. Can't see it because the labels behind the price is around 13,788, and R2 sort of around the same level. So yeah, there is a potential that NQ could still move higher, assuming that this was an end of a correction. Then potentially what we're seeing here is a 1, a 2, a third wave that potentially still underway, maybe a fourth, and then a fifth, and then potentially a deeper decline. Again, very strong markets. If you do get very strong markets, quite often your retracements might just be very shallow and, potentially not get that retracement that we've been looking for. But I just wanted to draw this. I drew this earlier. If I draw a pitchfork from this low, assuming this was a first wave higher of this sequence, so that's still underway, I think, to this low over here, which I reckon could be a second wave, then prices, I know there's a lot of lines here, sort of been respecting the shift pitchfork to the upside pretty well. It's been acting as support over here. It broke its upper median line. The upper median line did act as support as price retested it. And you can see now that price also beautifully touched that upper, what I call the red warning line. And that's quite often where price runs into, depending on any market that you trade, using market geometry. Let me just get that snap mode off again, where you could potentially expect resistance to step in. If we want to do a little bit of fib analysis here, assuming this was a first wave, second wave, is potentially still a third wave to the upside, and your third wave is typically impulsive in nature, is what this definitely looks like still. Then the third waves typically extend towards 138.2, 161.8, even stronger markets, you go 200%, even higher than that. So price just moved above the 138.2%, might still make it to 161.8. But yet again, we'll have to start seeing a decline that potentially retests this upper median line here to start thinking that a third wave potentially ended. Maybe that will lead to a correction and then get another fifth wave to the upside to complete this sequence that started around the end of April, and then perhaps get a deeper decline. So that's the thinking there on the NQ. YM, on the other hand, been way weaker than the ES and the NQ. If this was all still corrective, potentially seen an A, a B, potentially there, and then a C wave that could have traced out as an ending diagonal, and potentially the YM could be heading higher now, something like that. All right, so price broke out. If this was an ending diagonal, potentially a C wave. Quite often ending diagonals happen at the end of either fifth waves or the end of C waves of a correction. So this low did actually almost form a double bottom with this. So it's sort of like, technically, if you look at pattern analysis, maybe even a little bit of Elliott wave analysis, technically could have been an A, a B, a C. So price again, and this happened so many times since we've drawn this pitchfork, again, also here sort of from mid-March to the upside. I've been using a shift pitchfork. The YM has been really respecting these angles really, really, really well. And here too, although it broke below it, it is now at yesterday sort of bounced to the upside, found resistance at that same angle where it found support again. You see how it's been trying to break through it again. So I think while price stays below this, there's still a chance that YM might still want to make another low before we get another move to the upside. But should price break above and stay above this angled slope, sloping to the upside, it's acting as resistance currently, then we might, I think the chances would be higher that a potential low is already formed and that the YM finally finds some strength and start moving to the upside. So although price has been above today's pivot point for most of the day, 33,355, again, it hasn't even reached R1, and it's just been sort of bumping its head against that angular resistance line. So seeing a quite strong decline here at the moment. Quite often, when you do see a breakout of an ending diagonal, a lot of players do trade it like this. If you do get a decline, in this case, some bullish move to the upside or bounce, maybe see a retest of that upper trend line and then a move back to the upside. Just quickly look at a smaller scale here, assuming that, we got a 61.8 down here. potentially price could move lower. Again, not really trying to forecast things too much here, but also looking how price actually reacts in relation to our levels to lock, as well as market geometry, etc., etc. If price would break above there, then, you know, raises confidence that a low is already formed. Russell, on the other hand, as we all know, not been my favorite market for quite some time, since sort of the end of March. Price has been in a very sort of large sideways whippy range. I still think, though, that we could potentially be seeing a very large triangle forming here. That's just an idea that I've been playing around for a while. Again, you can't really forecast this. I think the probability raises that you might be dealing with a triangle once it's actually created its third wave and fourth. What's this? 1, 2, 3. No, what am I doing here? Let me just redraw that. I'm losing my chain of thought here. Maybe a 1, 2, 3. And if price then moves lower from here and it fails to break these lows, could be a 4. And if it moves up again, fails to break these highs and then start declining, and only then you can start thinking maybe it's a triangle. But anyway, not really want to spend too much time on the Russell, as you can all see. Good luck trying to trade this, you know, maybe from a swing trading perspective, because it's just been absolutely messy. Right, that brings me to gold. And this is the line I've drawn in last week. I was saying that we've been following gold as well as all the other markets, obviously, trying to figure out what the sequence was the price was moving to the upside with. And we labeled a fourth wave down here for quite some time, around the end of April already. We had a strong move back to the upside. Also, really, really great example of how well price has been respecting, in this case, a channel that I drew to the upside. Remember, this channel I drew in year, well, this was probably back in the beginning of April already. And you can see that even though price moved above that upper channel line, again, like I did previously with that NQ example, draw a line parallel to one of your market geometry lines. Even though price moved above that area, you did so by the same distance, and I've labeled this as 5. Beautiful touch of that sort of overthrow line, moved down lower, moved back. And I was saying at some stage here, when was this? Last week, that price would need to break above the center channel line and stay above it, which would then probably mean that I'm wrong about fifth wave potentially still underway. Price couldn't do it. We had a strong decline towards the end of last week. And again, I was saying probably confirmation that a fifth wave is if price would then finally break out of the confines of this upward sloping channel line. And since then, price has done that. So again, expecting that we might see a deeper retracement that potentially retrace a decent portion of this upward sequence that we've been following. I mean, price just hit the 50%, could potentially still go to 61.8. But if you're looking at the price action currently, just get rid of this line over here. Then let's say this is an ABC, it's just a single zigzag. Then we might have a 1, 2, a 3, a 4, a 5 materialize, then get something like this, and then another strong move to the downside at a later stage. Potentially, just trying to, you know, stay on top of things, what to expect. Thus far, expectations that we're going to see lower prices. That did happen. It's been a little bit weaker than I would have said it could have been, but it is what it is. Market will do what it wants to. Price already, when was this? Been below today's pivot point for most of the day at 1,986. Already broke through S1, S2, today's projected range low, as well as the first deviation projection low that it's already reached 1,955. So might find support here. Again, like also mentioned, once I start seeing a 5-wave sequence to the downside, I could then start using market geometry as well and see, you know, if there's going to be a recognizable pattern and if it is sort of following that expectation of what it could be. But I think this might just be the infinite or the infinite stages of a zigzag to the downside. It might morph into something else, but still expecting some more lower prices. That being said, if we take the high of this, where I assume a fifth wave was, if this was a first wave lower, second wave higher, price just tagged at 123.6%. The extension level, we still have the 138.2, a little bit lower down, where the price reaches that today or tomorrow. I don't know, but I expect a bounce at some stage and then potentially another decline. But we'll recap things again on Monday and see how things have played out. That brings me to crude oil. Same thing happened here with crude oil. I was saying, when was it, last week, potentially seen a 1, a 2, a 3, and then this was suspect that we had a decline with a 3-wave move to a new high, and that typically is what gives away what we call a expanded flat. You have a 3-wave move, although not easy to see on the 4-hour chart. A 3-wave move to a new high that typically just pips the high of the previous highs. And then you have a 5-wave decline, which is pretty evident to see. And our prices bounce pretty hard. Although it's been moving lower again, it's not really acting as a 5-wave at the moment. We might be seeing something like this happen. But so far, price has been sort of following the expectations. Again, if this was a 1, 2, a 3, and this was a 4th wave, I said last week, then potentially they find support at a 38.2% retracement, those 4th waves. 1, 2, 3 wave. Then you have this 3-wave move to the upside, this all being part of a correction. It found support right at 38.2, and it's now bounced higher again. So cautiously bullish still on crude oil, and still thinking that these highs might be taken out sometime soon, unless price obviously starts melting down from here again, like it has prior to this low, after that very, very strong decline that we've seen. So price already on the previous candle tested today's pivot point at 71.99. Yeah, so to keep this idea alive that price is moving, going to break these highs, price would need to stay above this higher low over here that was set on, when was this, on the 17th. So yeah, so cautiously bullish on crude oil. And that's pretty much what I have for you guys today on the analysis side of things. Pretty cool to see that a lot of these sort of directional expectations in these markets that we've been following for so long has been playing out pretty well, although we had to sit through quite a long period of sideways movement here on the ES. The expectations was that we did see an expanded triangle end around about that time frame in the beginning of this month, and that we could potentially see a break of these previous highs that formed at the end of April. All right, so that's really it from me.
Awesome. Well, thank you so much as always, Richard. We do want to leave some room for any questions about today's analysis. If you have anything for Richard, looks like my green screen's acting up. I'll just cut that off for now. And I know we did have a great question come through for you, Tony, but before we get to that, really quickly, Richard, our buddy over here on YouTube, we want to set up a little demo of Supply and Demand Pro for next week is something we were looking at. So I figured we could just quickly hash out, maybe if we can work that into the plan, get your thoughts.
Make a note here. I believe he asked about this previously.
He did, yes. And I promised him when you came back, we would nail down a date next week for him. So I'm glad that, he just shot that reminder in the chat. But yeah, I figured we can lock that in quickly.
All right. Supply and Demand Pro. Product Spotlight.
Yes, sir.
What for next week? We'll chat amongst ourselves, see which day works best.
Sure.
Maybe Monday. I mean, could be any day. It doesn't really matter.
Sure.
Normally we do it on Mondays, right?
Yeah, let's shoot for Monday.
Yeah, cool. Let's do that.
Awesome.
We'll be happy to go through that with you.
Perfect. So you heard it here first, everybody. Coming this Monday on our next session, we'll have a tool spotlight after the analysis. The featured tool will, of course, be Supply and Demand Pro. So obviously, for a reason, you've had this request, and we're happy to honor that request for you. But if anyone else was curious, or if you're a current owner and you just want to see some tips, anything about updates, etc., we'll be happy to break that out for you come Monday. So lots to look forward to there.
Awesome.
If we don't have any questions about today's analysis, we're going to go ahead and hand the reins over to Tony Edwards of Trader Smarts. And it looks like, Tony, if you just want to lead even with Nateen's question there for you. And then, of course, I know you have lots to share with us today. But, I'll give you the reins, sir.
All right.
Cool. Thanks, Nathan. Thanks, Richard.
Absolutely.
You're
So
welcome.
yeah,
Great to have you.
awesome. I appreciate it. Yeah. So 19, the 128 tick chart that we talked about yesterday in CL, it wasn't so much a strategy. It's just the speed of chart that I use across all of the markets that I trade. And I'm really only trading. I do analysis for 7 markets because I monitor them and have clients that want that data, but I'm really only trading ES and CL, and the speed of my execution chart is just 128 tick chart. So there's not so much a strategy behind that we talked about. It's just, we just talked about the speed of the chart that I'm using for execution. Does that make sense? This is when we need two-way mics in these presentations. Awesome. Okay, cool. All right, so let me get into what we're going to talk about today. And feel free to just, if there's anything that you want to ask as I go along, just type it into the chat. I'll see it. And then I'd like this to be as interactive as possible. It makes it a lot more fun. So we're going to talk about. You can see my screen, correct?
Currently, I'm not seeing the screen share now.
Let me fix this.
Perfect. I see it coming online now. There we go.
All right, cool.
Looking good.
So we're going to talk about journaling and record keeping today. And then I will go over the offer that I have for Ninjacators clients. And we'll talk a little bit about the small group mentoring that I have coming up. Our 3rd group is now starting on Monday, May 22nd. And then we can just look at some charts as well, if we have some time to do that. So first of all, risk disclaimer: futures trading involves substantial risk of loss and is not suitable for every investor. An investor could potentially lose all or more than their initial risk capital. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not indicative of future results. So I had a friend when I was growing up. His dad was in the military. He always used to stress this to us. I can't tell you the number of times I heard this saying, but the 7 Ps, as proper prior planning prevents poor performance. So kind of in the same vein of how proper planning prevents poor performance, once we have performance, we need a way to measure it so that we can improve upon our performance. And, there's 2 things that we want to be tracking when it comes to performance. The first thing that we need is a trade log. So a trade log is just simply a running log of all of your trades. And then, I have a trade log, and then I'll have like a daily log where all of my trades are combined into one, to make a metric for one day. And the second thing you need is a trading journal. So the trade log, we just said, is a running log of all your trades. And the main statistic that you're going to be measuring in your trading log is your expectancy. So your expectancy is just the expected profit or loss of our next single trade in that sequence. And you get your expectancy by analyzing the data from all your prior trades. So hopefully you guys are already doing this. But the calculation for expectancy is your winning percentage times your average win minus your losing percentage times your average loss. So, just say you have a 60% winning percentage and your average win is $50. You have a 40% losing percentage and your average loss is $40. If you do the math, your expectancy would be $14 per trade. Or you can also measure this in ticks. So the same thing would apply. It would be 14 ticks. I track my expectancy in both ticks and dollars. I prefer to focus on ticks because that way it's interchangeable across the different contracts that I trade. So the next thing that you need is a trading journal. Your trading journal is where you are going to record the quality of your executions, how well you traded according to your plan, your emotional state during the trading day, etc. So in your trading journal, the main thing that you want to be tracking is errors. And errors come in all shapes and sizes. So for example, like, did I execute according to my plan that I had for the day? Did I fail to pull the trigger on a setup? Did I make any crucial errors, like entering the wrong number of contracts, or worse, entering the wrong number of contracts and then not immediately hitting close, right? Did I take low quality trades or impulse trades or trades that were not within my plan that I laid out? These are all errors. Did I manage my trades according to my plan? So once I'm in the trade, did I panic out of a trade? Did I let it run to its target? Did I scale the way that I had it intended to, etc.? So the other thing that you want to be tracking in your trading journal is your emotional state during the trading session. And I think that this is overlooked by a lot of people. But in my journal, I note my emotional state before the session began, how I was feeling during the session, if my emotional state was changing, and how I felt at the end of the session. I also note if my emotional state positively or negatively affected my trading performance for that session. So your trading journal, you should have a system to grade your trades. So it's some type of grading system, a way to track errors, a space to calculate the dollar cost of the errors for that session, a space to note your emotional state, and a space to emphasize what you need to focus on in the next session. So, what can I say? So in my trading journal, I use a spiral notebook. I just prefer to write things by hand. And that way I can use one page for each session. But there's a lot of things you can use online. You could use Excel, tons of things you can use. But I like to have an actual spiral notebook. That way I can just go back and flip through it and really see visually in front of me what I need to work on, where I was making errors, etc. So I should have took a picture of this and just put a page in, but give you a little visual representation. So on this space to calculate the dollar cost of errors for that session, I have a little box that I put in the dollar cost of my errors. So say my errors costed me, just for example, $500. I will put in red, felt tip pen, bigger than anything else, negative 500, right? Based on the errors that I had or whatever. That way, when I'm flipping back through, because in order to get to a state of consistency, the main thing that you need to be doing, instead of like adding all these things and trying to improve upon this, all that's well and good. What the main thing that you really want to be doing is eliminating the errors that you're making. Eliminating errors leads to positive P&L. So then again, like a space to note your emotional state, a space to emphasize what you need to focus on in the next session. So say, during the session, your errors were that you didn't manage your trade according to plan. You got in the trade and then you exited prematurely. And this is what you had done during the session. For the next session, you're going to focus on managing your trade according to plan. So the grading system that I use, it's like an ACE, I call it ACE system, simple ACE, kind of like school grades. So A is excellent. I give myself a grade for every day. So A would be excellent. I traded well that day. I followed my process, followed my plan, didn't commit any errors. A C grade would be I traded okay. I may have had small error, but I didn't make any fundamental errors. And E is I failed to execute according to my plan. I committed a major error. I broke a trading rule, etc. So we just talked about this. I use a spiral notebook for my trading journal. I use one page a day for the session. I like doing this anything digital, but it's really personal preference. The main thing is you need to have some type of trading journal. And that's really all I have for you as far as journaling and record keeping. Any questions about that?
Yeah, please feel free to fire away. Please feel free to fire away in the chat if you have any questions for Tony on that journaling presentation, which was excellent. Thank you so much for the insights, Tony.
Yes.
Whether you're here on YouTube, I'm actually chatting with someone here on YouTube now, but if you have any other questions, I'm actually in the middle of I have another follow-up reply for you for a reason, but if you have any other follow-up questions for Tony, please feel free to fire away. And then I know, Tony, you also, I see you have it prepped and ready. So let me grab that link, make sure that is in the chat as well as we segue into this. So definitely take advantage of this link and what Tony is about to share with you. And then, of course, let's also talk about that group mentoring.
Yeah, sounds good. So most of you, I'm assuming, have been released here yesterday, so you kind of have an idea of what I do, but I do daily analysis for 7 different futures markets. This is analysis that I use for my own trading. Again, I'm really only trading ES and CL right now, but I have traded all these instruments in the past. So there's analysis for ES, YM, NQ, RTY, 6E, CL, and GC. And so I created this offer for you guys for Ninjacators clients. Special offer. You will get all of the analysis, also all the instruments that I do analysis for. You're going to get a free indicator license. So the analysis is done in a written form. I'll show you in a second. We'll go take a look at the indicator if you haven't seen it, but the analysis is done in a written form, and then the indicator takes that written analysis and automatically plots it onto your chart to give you a visual representation of the analysis. So you're going to get, again, all of the instruments that I do analysis for. You're going to get a lifetime, not a lifetime, you're going to get a free subscription to the indicator license for the life of the subscription. All of that normally runs $347 a month for just for the analysis. Then there's a separate fee for the lifetime indicator license. You're going to get that included in this trial. So the trial is $97. It will rebill at $347, and I did it that way so that you can check out. Maybe you trade oil and gold and ES or whatever. That way you can get the analysis for all 7 markets. If you only trade ES, what am I trying to say? If you only trade ES, you can take the trial, cancel it, sign up for ES, and I will transfer over that indicator's license to your new single instrument plan. All right, a lot of wording there. Let's look at markets and talk about small group mentoring. So here's ES. We talked about this yesterday. This is back in, I think it was last Wednesday. We had the CPI report where we put in a high and a low, and we had really been just trading inside. We just tested the low of the CPI right here, just I think it was by a couple ticks on this day. And we'd really been just trading in the center of this area, looking for, obviously, a market imbalance is eventually going to break out from imbalance. So balance leads to imbalance. And we talked about this yesterday, that the expected move was likely to be to the upside, just based on, price action of bigger picture charts. So let me get some water. And so you can see pretty much right when we ended our session yesterday, we had this breakup into the day's highest odd short. Sellers defended up here and kind of closed the session here. We really got this continuation move once we were able to get above yesterday's range short. Buyers coming in at range long right here. Then we traded sideways this session, had this push up into today's range short, a dip below the overnight low into here. And then buyers really stepping in at the top of this prior range to push above range short into this 41.90 and 42 again. So what the high is, 41.98 something, 41.99, and now we're just trading here at the bottom of range short against the prior high from yesterday. So this, my expectation, I think I mentioned this, is that eventually we're going to make our way, likely to make our way up to this 42.24 quarter number. This has been a target that we've had to the upside for some time. It's a couple of weeks now, at least. I think we talked about this. Not sure if we did or not, but on one of our prior profits at noon. So here's ES. Do we want to look at any other markets? Let me just read this comment. Tony, I will reach out. Budget is tight right now. Interested in your indicator. I'm coming back into the market. Long story short, taking care of early parents. Perry, I wish you well with that. Good, nicely done to be taking care of your parents. So that's, I applaud that. We'll do the exact same thing. but yeah, email me and we can go from there. So let's look at execution. Somebody mentioned that.
Sure.
I think it was 19, right? So this is my execution chart. This is ES. And you can just see it's one of my execution charts, I should say. I use two different platform execution charts. There are two different platforms for when I'm trading. And I mentioned this yesterday as well, but I have also on my execution screen, I have 3 128 tick charts. 2 of them are with a provider that it's not aggregated data. Another one is a provider that has aggregated data. So the chart obviously that is non-aggregated will be a faster chart, which is this one right here that we're looking at. And I mean, we could take a look at oil today. We just started trading end contract. It's going to take a second to load. While this is loading, I'll just mention about the small group mentoring. So small group mentoring is really an opportunity to work closely with me in a small group environment. We've done 2 of them now. They've been fairly successful. Seeing a lot of progress by traders that have participated. And it goes for 4 weeks. We start on Monday, May 22nd. In small group mentoring, you will get a lifetime license to the indicator. So that comes complimentary. So you'll have that lifetime license. You will also get analysis for all of the markets that I cover. You will have access to a Discord small group chat that we're active in. And then we'll also be on Zoom during the US cash open to the European close. That's really the only time that I'm trading right now. Looking at live markets and setups and what have you. There'll also be other Zoom classes where we talk about my execution setups, my execution chart, anchor charts. I go through my process of how I trade. And then there'll be a trader intake form if you do sign up that you'll receive. You'll fill that out. I'll get a good idea of where you're coming from and what we need to work on. And the classes outside of the live market sessions are really designed to help the individual traders in the group improve upon the things that they need to work on, eliminate errors that they're creating, etc. And it kind of comes down to, it's usually people kind of have the same list of situations, right? So they need to understand how to establish a contextual basis for what's taking place. And then you need to be able to, once you have a contextual basis, so you understand context of what's happening in the market, then it's about getting a directional bias so that you can have a direction that you want to trade in. Not a huge fan of coming in and just looking at the market and being like, okay, I'm going to take this long, this short, this long, this short. But don't get me wrong, I'll trade both to the long side and the short side intraday, but just resetting everything so that you're focusing on one side and you have an expectation that the market is likely trying to achieve this price. It makes trading a ton easier. So again, that starts May 22nd. And if you're interested in that, I don't have a link to it, but just email me. So you can go to the website, email me, I will respond. I will send you the sign-up page. And the sign-up page obviously talks a little bit more about it in detail, exactly what to expect, etc. And yeah, so here's oil still wanting to load for some reason.
Awesome. Well, I do have a question coming through over on YouTube if we want to maybe quickly take a look at that.
Let's do it.
So for a reason, wanted to know if I apply this indicator to a Heiken Ashi candlestick, and let's say I'm preparing to go long, how can I figure out the confirmation since Heiken Ashi is going to calculate differently from candles?
I buy the indicator and I'm using Heiken Ashi. Say that again.
If he is applying your indicator to a Heiken Ashi chart, and say, for instance, he's preparing to go long, how is he going to figure out, entry confirmation, for example, if it's calculated differently than a candlestick chart?
Got it. Yeah, I mean, that's a good question. I don't use Heiken Ashi, so I would be kind of just like guessing to answer that. I have a buddy in Florida that actually trades using that.
Mm-hmm.
I don't. So I couldn't really honestly tell you. I don't want to just say something just to say it.
Sure.
So yeah. I mean, I will say as far as the indicator, right, you're getting levels. So here, let me show you this. So this is the written analysis that you're getting, the written plan.
Sure.
And then, you know, these zones in here are plotted onto your chart. So like, for example, today we have this 41.87, 41.78 range short. That's this area right here. You know, we have the line in the sand, which is where we kind of spent the whole European session before not the European session, the Asian session before the European Open right here, and had this push up. So I mean, you're getting levels to execute at, as well as target your trades to. As far as confirmation based on like Heiken Ashi, how you're going to get long or short, that's kind of an independent thing, but you can definitely use that along with this.
Excellent. Well, if you need any additional clarity on that, just let us know there in the chat. But it's, you know, potentially a situation, as he pointed out, with those levels being kind of printed on the chart, it could just be a non-issue. So excellent. If we have any other questions for Tony while we have him here in the house, we've got lightning in a bottle here, folks. So if you have anything else for Tony, please feel free to fire away in the chat before we wrap up here today. I am going to share that link one more time. That will get you the trial offer that Tony described to you earlier today. It does include access to that indicator with those license fees waived. He will give you access to everything, all of his markets, with the option to, you know, scale or to scale back depending on your needs. So it's a very cool, unique offer to these sessions. So definitely encourage you to take advantage of that. And then, of course, while you're on the website, if you're interested in joining Tony for the group mentoring that's starting this coming Monday, so that's just after this weekend here. So that is a more timely opportunity, but we do encourage you to check it out. And Tony is very responsive, very directly involved with his clients. So we know you're in great hands, and we know he'll be very responsive to you. So just shoot him an email if you want to learn anything else about that group mentoring and find your spot in it. So, so For a Reason does look like he has one more follow-up just really quickly on that. So is it just a better bet just to be using candlestick charts with your indicator to begin with?
No, I wouldn't say that. I would say okay, use what works for you, but you know that you can use, you can use Renko, you can use tick charts, you can use time-based, whatever you want to use. The indicator will work with it.
Sure.
But no, I wouldn't say that it's a better bet to use candlestick charts. I'd say that it's best to stick with what is working for you, if that's working for you.
Sure. No, and I like that, and I agree. I would echo that sentiment for sure. If you're seeing success and you have a strategy, and that type of chart is a part of that, and you're seeing sustained success, stay within that comfort zone where you're seeing those wins, and then supplement and scale from there and build. Or, as he pointed out, if it is maybe, if you would like to explore other things, if you're not seeing the results you would like to see. So that's also an option. And of course, here's a great place for you to learn about just some of these different techniques, different tools, and different ways to approach and attack the market. And then obviously, a great opportunity to remind everyone we'll be back on Monday with a tool spotlight on our very own Supply and Demand Pro. So after the analysis on Monday, we'll get you caught up what you can expect for the week ahead, and we'll dive right into a full-fledged demo of the Supply and Demand Pro. So lots to look forward to there.
Yeah, awesome stuff, Tony. Thanks for that.
Yeah, cool.
Very cool. Well, it looks like we don't have any more questions coming through. So this is the point where we'll kind of cut you guys loose into the weekend. But of course, as promised, or as threatened, I should say, we have a 3-part dad joke on deck today. A triple threat. Yeah, you know what? That's a good point. What I did yesterday, Richard, is I turned my camera on. I do have to fix this issue real quick. I turned my camera on to take ownership and responsibility for the joke that I'm going to share, because yesterday's was bad, Richard. It was bad.
Really?
It was one of the worst.
It's the highlight of my day.
So here we go with our terrible puns. As I said, it's a 3-parter. I won't take too long, and I will drop them in the chat. So what do we call a cow with no legs? What do you call a cow with no legs? Is this ringing a bell, Richard? Because I did share it with you like a month ago.
Yeah, you did.
So you can't cheat then if you remember the answers. Okay, so our first one. What do you call a cow with no legs? We call that ground beef, ladies and gentlemen. A cow with no legs is ground beef.
Offending vegetarians.
Quick follow-up question. What do we call a cow with 2 legs? What do we call a cow with 2 legs? Ladies and gentlemen, we call that lean beef.
No.
And to round it out for this trilogy of terror, what do you call a cow with all of its legs? So what do we call a cow with all of its legs? So, ladies and gentlemen, we call that high stakes.
Oh, no.
So, we got through that
dear.
together as a team.
Oh, dear.
If anyone needs counseling after this, I understand. We did it together.
Well done. Well done.
So there you have it. There was our terrible dad joke of the week. Perry, thank you. It looks like Perry enjoyed it as well. Enjoyed, or it's hard to say whether we truly enjoy it or if there's just so much cringing happening. Somewhere in the middle is that sweet spot. I got a Your Mum over on YouTube, which Your Mum jokes could come into play, but we'll have to be a little more careful with those, I think, because those can get
be careful.
out of control a little more quickly. So thank you again, everyone. Thank you to our host, Richard Krugel. It was great to have you back today. Thank you, Tony, for spending your time with us this week. We wish you and all your clients all the best with this new group mentoring starting on Monday. And we do, of course, encourage everyone here to check that out. I want to remind you just one more time, Monday we will be back. And of course, with that Supply and Demand Pro demo. If this was your first time, we encourage you to join us for our follow-up sessions. We are live 3 days a week, Monday, Wednesday, and Thursday at noon Eastern. Looks like we do have one quick question coming from Hani here in the chat. Do I need tick data for the volume profile indicator? Is that directed towards Ninjacators, actually? Or were you asking about Tony's indicator? I'm not sure if you were here for Tony's presentation.
Honey, are you having issues loading the volume profile indicator? Is this the one that they offer at NinjaTrader as standard? I do know that they got those sort of really flashy ones, but you need a live license to actually make it work, because there's a pop-up window that will come up that mentions that you need a live license. So as far as I know, I can run that profile indicator with, I've got about 3 different data suppliers, and they all work without having to load tick data.
Got it. And he looks like
Are you talking about Ninjacators?
Yeah,
Right.
it looks like he is.
I just use the one from NinjaTrader, not Ninjacators, though, but I can definitely look into that for you if you really want to, and provide you some feedback, maybe on Monday, if that's okay.
Sure, yeah. We'd be happy to look into that. Yeah, absolutely. I have it here. We have it here in our members area. So yeah, we'll be happy to look into that further for you and give you the best, clearest, most definitive answer on that. No problem. So, Hani, we do encourage you, if you can join us next week. We'll be live Monday, Wednesday, and Thursday at noon Eastern time. We'd love to see you. We'd love to have you. You're absolutely welcome. Yeah, we look forward to giving you the best answer to that question for sure. We'll be happy to help you.
Absolutely.
Excellent. Well, thank you so
I
much
made a
again.
note, so I'll remember that for Monday as well.
Sure. Yeah. You better write it. Yeah, write it down. I see you writing it down. Awesome. Okay,
Awesome.
Great. Well, thank you so much. Over on YouTube for a reason. It was great to have you back. Anyone else, if you do want to join us in the future in these Zoom sessions, there's a link in the description beneath that video that will get you in here in the VIP. Thank you so much, Hal, for sticking around. It's always great to see you. We're wishing you a great weekend. And of course, hoping to see you again on Monday. Thank you again, Tony, one more time for spending your week with us. We do hope to have you back in the future, of course. We always have a great time with you here in these sessions. And yeah, any parting wisdom on the way out the door?
So I cut out. I'm not sure if you guys heard what I said. Somebody asked a question about tick data. Did you hear the response to that?
No, we didn't hear you at all,
Oh, okay.
actually.
I was rambling around. I don't know. I didn't hear anything. Sorry.
Yeah, my Zoom is acting up again.
Sure.
But yeah, so my indicator doesn't have anything to do with volume profiling, but if you are using volume profiling, the most accurate way to have accurate volume profile is with tick data. So yeah, I would
Got it.
say yes.
Fantastic.
Cool.
Perfect. Well, we'll still be happy to revisit that too on Monday, but that sounds like a clearer answer for you too as well. And yes, Hal, have a great weekend. Thank you so much, everybody. We will see you all
Thanks, Hal.
again on Monday.
Cool, everyone.
Take
Have a
care.
good one. Cheers,
Have a great
Tony.
weekend.
Take care.
Take care,
Have a
you
good
guys.
one. Cheers. Bye-bye.
Bye, everybody.